was counting on really as we roll here and through the fall is that the impacts of the pandemic have been so long lasting. It's like, oh, well, we're going to do this for 8 weeks. And then they did a 24-week period to use the funds, once you receive your loan. But, these impacts are much longer lasting than that.
Hey guys, and welcome back to Building a Family Business here on Builder Funnel Radio. This is episode 26. So if you're still with us, we're kind of surprised at this point, but we appreciate it. Yeah. Wes, how's it going today?
It's going great. Thanks, Spence.
Good. Brooks, how are you doing?
Doing good, Spence.
Good. Well, it's been a little while, I feel like, since we dug into PPP, and kind of there was a whole flurry, when that first came out and a mad dash, everyone was running to their banks to get stuff done. But I know you guys have both been working with a couple of different banks and getting different updates, and figured it'd be good to kind of do an update and see where we're at. I know there's the whole forgiveness process that it was there, and then it got extended, and then, who knows where we're at. So I guess, Brooks, to kick things off, I guess, what are you hearing about where we're at in this process right now?
Well, Spence, I always believe in forgiveness. I
think
that's
good.
The most important thing. In all walks of, in all aspects of our life.
Yes, especially with loans. Yeah.
Especially with loans and large loans.
Yeah.
So yeah, we're hearing all sorts of different things on forgiveness. We're hearing different things from our CPA. So approach, that they're taking is we have no idea what's going on. Don't do anything. Who knows what will happen? And most likely the sky is falling. So that's
nice. That's a good update.
Yeah, I know.
So,
it's very helpful in your business life to have that as one of your.
So the CPA is just saying, just wait, just sit back and chill for a little bit.
So that's one CPA. We have several CPAs. So we have our personal CPAs, then we have our corporate CPAs, and we have multiple CPAs depending on, Wes has a different CPA than we have, and so he's going to have.
Yeah, I think
too. Yeah.
What I'm hearing is similar to what Brooks just said, except without the sky is falling part. But it's more just the wait and see, because at this point, you have to kind of go back and think about the PPP program and how it was developed and why it was developed. And it was very quick. They really did put that legislation in.
Like a week.
Pretty quickly. Yeah. So with that, whenever you do something that quickly, there's going to be a lot of issues or things that haven't been able to be thought through thoroughly. And so the legislation was pitched over to the SBA. The SBA then spent time writing a bunch of rules to try to figure out how to implement the program. So I think when they first rolled it out, it was kind of chaotic because there was a lot of need. Everyone was very needful of this, and especially small business, which most of the country is. So that created some issues up front, just even getting in on the process and even understanding what the program was all about. So what they have continued to revise as we go through time is, how does the forgiveness process work? How do you calculate how the money is spent and what it can be spent for? And so all of that is still kind of up in the air as we come down to, so now we're recording this, a couple of weeks or so before the election, and there's still legislation that, or they're hoping for legislative fixes to some of the issues. And the biggest issue really is around, how do you deal from a tax standpoint with the loan forgiveness? So anyone who's listening to this who's got a PPP loan has probably already bumped into this, or their CPA's brought it up. But what we're hearing is that if you took out a loan, and let's just use a hypothetical, you took out a $100,000 loan and you use that money to pay employees, let's say, and the whole goal was to keep people working, right? So let's say you have a business where your revenue went away, but, and for the hypothetical, let's say your revenue went to zero and that you spent $100,000 retaining employees on staff to help them weather that period of time. And you expense that. If the loan is forgiven, the way the rules are written right now, my understanding from listening to our various CPAs.
Is that CPA 1, 2, or
right,
3
yeah.
there?
Which one is it? But simply is that you cannot, because you use loan funds to pay payroll, you can't deduct that payroll as an expense, as a business expense. So let's say zero revenue, $100,000 worth of expenses. Now you can't deduct that. So you're going to end up paying taxes on that amount, really. So let's say you're in 20% tax bracket, you're going to pay $20,000 in taxes. And the benefit was really, what it is, it allowed you to keep people working. So the employees benefited. But as a business owner, if you didn't have any revenue to support that at all, then you had to come out of pocket for $20,000 in order to make that whole thing work. So I think that's at the crux of it. I don't know. Is that about right, Brooks, from what you're hearing?
Yeah, no, I agree. And so that's the challenges when they did the program, the IRS, came in and said, oh, well, we're not going to allow to deduct these expenses. And that's not something they covered in the legislation. So that's part of the challenge.
So everyone went out and got these loans because like, you got to get it. But then now people are going, oh, well, if I just used all those funds to support my staff, now I'm still on the hook for this chunk in tax. Yeah.
And so I think what we don't really know, at least I'm unclear on, is whether it's going to be, well, number one, will there be a fix for that, or will they just continue on and go forward with that? Most people are saying, well, we think there'll be some sort of a fix, but I don't know whether that fix will be a legislative fix. So we're having to wait for the legislature to do something, which could get tied up with the election and, any folderol that happens after the election. So we don't know that. Or is it going to be an SBA rulemaking fix? Them working with the IRS, or who knows? So it's still kind of a mess. Not a huge mess, but I mean, it's unclear. And so I think most people are holding off on applying for forgiveness because it's also unclear if you apply for forgiveness and then they change the rule after your loan was forgiven, would that be a retro fix, right? Or
yeah.
So anyway, it is a little bit of a mess.
Yeah, and I don't know the exact date, for when the loan forgiveness would expire, when you could apply. So there was a date of when you could start to apply for forgiveness. So I'm not sure.
So 10 months. The latest thing I heard was 10 months from the date of loan
inception
funding. Loan
is
loan
how long you had until you could apply, or you could apply up until 10 months?
Up until that's the last thing I thought I heard, is you have up until 10 months. So like all these things, go, if you've got a PPP loan, go back to your lender, go back to your accountant and check all the experts. We're just kind of spitballing here, but this is kind of what we've been hearing.
Based on
it seems like there's some time. It seems like there's some time to work it out.
Yeah, but I guess I'd definitely check on that for sure. It's like, hey, when would be the last day I could apply for forgiveness? And that's kind of your time frame.
But I think one thing that no one was counting on, really, as we roll here through the fall, is that the impacts of the pandemic have been so long lasting. It's like, oh, well, we're going to do this for 8 weeks. And then they did a 24-week period to use the funds. once you receive your loan. But, these impacts are much longer lasting than that. So it'll be interesting to see what happens if there's any more stimulus money that will be coming out, anything like that. Otherwise, I think all this money from the government has helped prop up the economy to a pretty good extent, especially with the Fed. But now, as that money has run out, are we going to see this big drop off in economic activity? As you think about people that have lost their jobs but were able to get unemployment and the extra supplemental, and as that runs out, and then they're going, oh, now I'm living off my savings again. I don't have a new job. So I'm a little concerned about what will happen over the next quarter. From that standpoint, we'll have to wait and see.
Yeah, and you said, that this has probably helped prop up the economy. I hear some people talk about, well, the stock market isn't the economy. The stock market has been doing well, and so it is almost like a guise that's kind of saying, well, like that appears to be going well, stocks are way up, but then there's really a lot of the small businesses and some of these other companies that aren't public that are really hurting, but it's maybe being overshadowed and not focused on enough, just because all the gains that have been made in the stock market. I don't know, what do you guys think about that?
I'd agree with that to a certain extent, but they have shown that the savings rate has gone up over the summer, as people receive these larger checks, and that consumer debt has not grown, and if anything, it's dropped a little bit. So I guess we'll have to watch those two numbers and see what happens, as we go through towards the end of the year. So I think some of those things point to the fact that it did have a pretty positive effect in helping people stay afloat. And, our employment rate has gotten a lot better since the 13 or 14% that it was.
Yes, it'll be interesting if it's, at 7 or 7, 8 or 9% unemployment, whether that's kind of where we're going to sit for a while, for a couple of years until, things get improved.
Yeah,
in some way.
right. Yeah, there's a real interesting article in the Wall Street Journal. It's something about, the impact of the pandemic through 2024.
Right.
Oh yeah, it's called, it's called The Long Shadow. The long shadow of the pandemic, 2024 and beyond. And basically what they're saying in the article is that it's divided up into 3 parts, which is kind of your immediate pandemic response, and then your intermediate period, which runs out a couple of years, and then post-pandemic. And they put post-pandemic about 2024, but over the next couple of years, to Brooks's point, people are going to be figuring out new businesses, new business models. Some old businesses will go away. How we do business may, or just even our social patterns and everything could change permanently. And then, as we get vaccines and we figure out how to live with the virus, then all of a sudden we'll kind of pop out of this about 2024, and then
4 years
all bets are off, right? Yeah, I mean, and then they're saying, hey, spending should be pretty liberal. People go, oh, good, I survived this. Good times are here again, and so we should see kind of a big spike up. Kind of an interesting analysis.
But if you're a small business, you have to survive for probably 2 to 3 years, which is very similar to a lot of cycles, where if you run a small business over a 10-year cycle, you have 2 or 3 great years, you have 3 or 4 bad years, and you have 3 or 4 years like, oh, okay, this is all right. And this is a pretty dramatic downturn, like the Depression or the Great Recession. So if you're kind of on the
so what do you think, Brooks? I mean, should people be business owners? Should they be looking out and going, is my business, not their specific business, but is my industry, is it going to be around? Is it going to change 4 years out? And if the answer is no, should you be working now in some way to figure out, oh, I need to get into something new altogether?
I would be, but I always approached it that way. It's like, oh, well, I wonder if this in, the industry I'm in construction or whatever, or the niche I'm in, is that, how long will that last? And in thinking about that
Yeah.
and trying to adapt. And yeah, because if you're looking out there going, well, it is hard to know, because if you're kind of pessimistic, you could look at something and say, oh, well, this is not going to last. I should just move on to something else. If you're optimistic, you could be like, oh, this will be fine. It'll grow. So it's probably somewhere in the middle where it's like, maybe I'll be in the construction business, but I'll be in a different part of the construction business, or a different, um, maybe we won't be focusing all on kitchens. It'll be some other aspect.
Yeah. Though amazingly enough, so far, construction, at least residential construction remodeling,
Oh, held up
through the
super
roof,
strong.
through the roof. So, it's certainly a blessing for the folks that are probably listening to this podcast.
Yeah, it's kind of interesting because I was thinking about one of our last conversations where we were talking about there aren't any public remodeling companies, and one of the articles I was reading, I think it was also from the journal, but it was companies with less than 100 employees used to make up 40% of people employed, and that was, I think, the late 80s, and then today, or more current, it's 33%. So it's dropped quite a bit. However, I was going to see, Brooks, you said you're kind of always forecasting, like, will the industry be around? Will it change? Will it just look different? What do you think, for a lot of, remodeling companies? They're not public, they're small, they're local, they're family run. What do you think that they should be thinking about over the next 3-4 years? Is it still viable? Everything seems really strong right now. Do you see any changes?
I would focus on, yeah, if you always have to look at job growth in your area, look at what's going on with home values going up, because job growth is really going to drive home values, home ownership, people's ability to remodel. How much are home values going up, and it allows people to access equity. Interest rates are really low right now, and they probably will be for the next 2 or 3 years, which allows people to tap into equity and borrow to do remodels. So I would be looking at trying to capture, build upon your brand, build upon your, if you have a family brand, if you have your local business, build on that brand and continue to just try to capture more market share while other people are kind of falling off. So there's going to be a lot of remodelers for maybe 1 or 2 people, and they just kind of lose energy, lose hope. They're just like, well, this is getting tiring, and they move on, and there's opportunities to capture their market share. So I would be, kind of have my elbows out and be like, okay, I'm going to go out and get as much market share as I can while things are good, and push other people out. And then when things get slower, you just have more market share.
So Wes, what do you think about the next few years? How should remodeling companies be positioning themselves?
Well, once again, because the market's pretty strong, I guess I would recommend cleaning up things as much as you possibly can. So, it's real easy when times are good and you're super busy running around to let things get a little ragged and rough around the edges. Your customer service falls off, you're not as good following up on your warranty, you're not communicating with your clients as much, all of those types of things. And so you have to fight against that, even if it means you're going to do a little bit less business. I would urge everyone to be really working on their systems at this point and being super sharp in their operations. And so I think that'll lead to what Brooks was talking about earlier, which is you will start to naturally grow your market share as your competitors in the space don't do as good of a job in that area as, say, you are. So let's say they're so busy that they're not, updating their clients on their projects, or they're having trouble getting their subs in, and it's just kind of a little bit of a train wreck. Timelines are stretching out an extra month or 2 months on projects. So if you can maintain a super high level of performance during that period, and either it's because you are taking fewer jobs, trying to make more money on those jobs, do a better job with those jobs, then I think you'll come out of this even stronger, because I think some of those folks will fall away due to the fact that the market is super strong.
Yeah, it's interesting. The article was talking about just how COVID could be destroying small business. And I think that's kind of a blanket statement, but we've certainly seen a lot of smaller local businesses go out. I think they said maybe 20%, and they may not come back, and people have definitely turned to, e-commerce and online shopping for a lot of those types of, little retail stores. It's going to be tough for them to come back. I don't know. What do you think globally this does for residential construction? I know we kind of talked about what you should be doing, but do you think that we will see a push towards consolidation, and will we see some public companies popping up in the next, 4, 6, 8 years, or do you think it will look pretty similar? Brooks, do you have any strong thoughts on that?
I just be really surprised if somehow you went to a public remodeling company, but anything can happen. If capital is chasing a return and someone can make a case for a great return and they can sell that idea, no reason it couldn't happen, for sure. Whether it's not going to be an exit strategy for any of us in the remodeling business, or maybe it would be in new home construction or development. But I think that Wes's point, which is over the next 4 or 5 years, focusing on your markup, your margins, tuning up your systems while you have the opportunity. I think that's a great opportunity. And there's going to be opportunities there's a huge shortage of housing across the country. And there's a huge shortage of affordable housing. And we're not producing enough units of any type of housing. So we're just short. And that continues. So, which is a great thing from the standpoint of if you're a remodeler or you're a builder, because there's just not enough product. And so there's not going to be an oversupply, which is kind of an amazing thing. So if you can think of ways that in your neighborhoods or in your town or city, what are the markets that are in short supply, and maybe you're able to do remodeling for affordable housing. Maybe there's some nonprofits that are doing things. So there's going to be new opportunities to work and to use your business. You just have to keep your eyes open to what they might be. That might be different. You might say, gee, there's a huge opportunity to repurpose apartment buildings for affordable housing, and apartment buildings are right now relatively, easy to get a hold of in my market. Maybe that's another thing you do. You redo apartment buildings and then you sell them to, could be an affordable housing entity, or you sell them to a private investor. So there's different things you can do. I don't know if that answered your question or not.
Yeah, it does. I mean, I think you answered it, but then pivoted to like, hey, what can you do if things change? And I think that's, something that you guys have always brought up on these episodes, is kind of having your eyes up during challenging times and looking for those opportunities. Wes, you were going to jump in.
Well, I just think as human beings, we tend to extrapolate and think very much in a linear fashion. And so what that can lead us to is the belief that things will continue on the same way, or they'll continue on in a progression that makes rational sense. And I think if anything else, the pandemic is just a reminder that, yeah, that's certainly not the case, and you can't plan for those things. So if you can't forecast those things, then all you can really do as a business owner is tighten everything up. And, right now I'd be banking cash as fast as I could, because that gives you the flexibility that you need. So I would definitely be looking at that and trying to build cash reserves right now, because it is fairly uncertain. and we have some good ideas, about different directions that things might go, but we don't know which direction that they will go. So if you've got cash on board, you'll be able to respond. You'll be able to survive to the next thing and be able to take advantage of those opportunities that present themselves.
Yeah, I think it's a good point, because I know back to the PPP loans for a minute. I feel like when everything came out and everyone's going for loans and stuff, and then all these kind of larger companies that took some funds and then they gave funds back, it was like, oh, do they really need them, or should they have gotten access to it? I think one of the questions that we kind of just were roundtabling on was, who should have gotten that? Was it companies that were showing losses and that really need it? Was it certain industries that were getting hammered? And so I guess one question I have is, Brooks, do you think they're going to do another round? And if so, are they going to tighten, are they going to change a whole lot? Have you heard anything about that? Or
well, let me blow some mist across behind me, and I'll look into my crystal ball.
Yeah, let's do it. I mean, that's what this is all about, right?
Right, yeah.
Get out the crystal ball and take some stabs.
My understanding is there's still PPP loan funds.
Well, right. I think it's 130, was it billion left? There's a ton left.
Yeah, it could have been a billion.
130 something. Yeah. Was that pennies or? Yeah.
Yeah. No, I think there's still, who knows how much has been used up since then. I think if you go back to the PPP, if you weren't able to get a PPP loan in the first or second round and you're feeling like I could use some more capital, I definitely would be applying for it if you don't have one already, for sure. I think it's worth it. It's worth the kind of the effort to, if you don't have a banking relationship, to create a banking relationship, to go and do that exercise. And, maybe you get a couple $100,000 or something. And I think that's worth it to know how to do it. And most likely they'll figure out the deductions and it'll be a benefit, to the company. I think they should do more stimulus, because I think as we discussed, or as we were, is that, the PPP loans probably didn't get to everybody that really needed them.
Right.
It got to people that this is helpful. This is good, but you know how difficult it is to get a loan, and you might try, but if you're running your business and it's so difficult and the banks tell you no, and you're like, well, whatever, so I think the mandate would be do more stimulus, mandate to the SBA and the banks, which is, you go out and find the 10 or 20 or 30 most neediest businesses in your community, and you approach them and say, hey, we could make you a loan.
Yeah, I think that's a good idea, because, I think one of the articles that we were reading talked about how banks were pretty much, because of the speed of the program, they had been advised it would be better from a vetting standpoint to go to their current customer base and loan to their current customer base. And I know initially when we were looking at the PPP loan, and I was calling around to some different banks, and that was kind of the message, which is, okay, well, do you have a banking relationship with us? And so if you don't have a strong banking relation, for those small business owners, let's say somebody maybe who owns a salon, or, they may not have a banking relationship in the way we might think about a banking relationship in our industry. So that would mean the money wouldn't have gone to them in the first round. They would hopefully gotten it in the second or third round, but if they got discouraged or didn't hear about it.
I like
that proactive approach.
Yeah, I think proactively, again, it goes back to one of our earlier episodes, which is create a banking relationship, have a banking relationship, because it creates that opportunity when something, who would have thought that having a strong banking relationship matters as much as it did. And then when the stimulus came out, it's like, oh, this is critical, because we worked diligently with two different banks that we have relationships with. And one bank was, yeah, you've got kind of have a relationship with us, but not the way we're going to define it. So, no.
So what did you learn?
We wasted how many weeks with that, Wes? We wasted 2-3 weeks during, the crisis. And then finally we switched to our other bank, which had a different set of parameters about, and it kind of goes back to this whole existing relationship and how they
I think each
bank.
bank heard what the government was saying, and they, obviously they're going to try to interpret it to what they feel the government was suggesting at the time. And for a lot of them, they're like, well, no, okay, you've got to be, they had these criteria about what your banking relationship would look like. Oh, you do all of your business with us, or, different things like that.
So Brooks, what did you learn about how they defined that relationship? I mean, you said the one kind of was like, nope, but obviously you do some business with them.
Well, two different banks, one a regional bank, one a national bank. Regional bank, who I would have said I had my better relationship with. That's where my private banking is, everything like that. I thought, well, fine, I'll just call them up and we're doing loans. Nope. Because I didn't have a large enough borrowing relationship. So again, to Wes's point, that bank set their criteria, and they were scrambling to decide what their criteria was. So I was talking to our private banker twice a day, and they were scrambling around going, well, we don't really know what we're going to do yet. So they're trying to keep everybody at bay, and everyone's freaking out because they don't know how bad the pandemic is going to be. And finally it came down, and we had already switched to the other bank when we realized, we're like, oh, this isn't going to work. And luckily the national bank, their criteria we met, but we could very easily have been out of luck. And then we would have just been on the street going, okay, well, now what do we do?
Right.
So how would you recommend people going forward in establishing or building those relationships? Was there any recipe you uncovered, or is it just?
I probably wish I had 2 banking relationships.
Increase your odds.
Increase your odds.
I think like all these things, right? So make sure you have deposit accounts, make sure you get a checking account, and make sure you have a lending facility set up with them. So
which can be a credit card.
A line of credit.
Could be a credit card.
Yeah, or a credit card. It could be a credit card. It could be a line of credit. Anything like that. You could take out a loan, even if you don't need it, and just repay the loan over time. But there's a number of different things you could do to kind of make sure you're checking all the boxes. And that's about all.
Make sure they're an SBA lender.
Yeah. Right.
Never thought of that.
Right. That's a good point.
Yeah, that was a big one this time around. And I mean, there's no way to predict what the next crazy thing will be, but those are good steps.
You wouldn't have thought, make sure your bank's FDIC insured. Well, that's something you learned from the Depression, and you don't keep more than 250 grand in a bank. And that's just something you learned from the Depression. You'll never forget that. Right. And so people now are like, well, what's FDIC insured? Well, it's kind of something that's so important that you do that. And so that's something to think about. So maybe make sure your bank's an SBA lender is important now. And it may be important, going forward. I don't know.
Yeah, that's true. I mean, each time you go through this, you just add one more thing to your, checklist, and
with age comes experience.
Yeah. Well, so Wes, what takeaways do you have for everybody after kind of bouncing around the PPP topic once again?
I don't know that I have anything that's worth sharing, but I just got to go back to those old saws, which is, you got to be ready for downturns. You got to be ready for opportunities. So continue to make sure that you have a good cash pool, make sure you have good lending facilities, that you do have a relationship with the bank, some of those things that we talked about today, and then just continue to work on your systems. Make sure that the product you're offering is something that's in high demand and that you're able to produce it efficiently.
How about you, Brooks?
Do the same. I tell you, those are just things you just have to, it's boring, but it's what you need to do. You want to be successful.
Cool. Well, we'll keep you guys posted on all the stuff we don't know, and over the next several weeks, and see how this shakes out. But I don't know. For me, hearing you guys talk, big takeaways are always, hey, residential construction super strong right now. Like, get good margins, be choosier on your projects, bank the cash, and get ready, for whatever's next. And there will probably be a lot of stuff happening over the next couple of months, and then you'll be more prepared. So thanks everybody for listening. We appreciate you guys tuning in, and we'll see you next week here on Building a Family Business on Builder Funnel Radio.